Over the past few weeks, we have had the privilege of listening to a lot of people smarter than us talk about the housing market. And there really have been two camps from the economists that we have listened to. Camp number one has been that house prices are going to continue to decrease in 2023. And camp number two has been that we are going to see a recovery in the housing market. So today we wanted to break things down and talk to you guys about 3 reasons why the housing market will crash and 3 reasons why it actually might not.
So today we're going to play a little bit of good cop, bad cop. And for those of you who know us, Peter tends to be a little more conservative than I am, so he'll be playing the role of bad cop today. And I'll be playing the role of good cop, being a little more optimistic that this is very much a market correction and is not an impending crash.
Reason number one why we're going to see house prices slide in the new year is because we are going to see a big increase in inventory. And the increase in inventory isn't the whole story, but the other part to that is that the demand isn't going to be there to meet the supply. We've heard both anecdotally from our own clients and from other agents that sellers are going to be waiting until the springtime because they think house prices are going to bounce back. And while hopefully that's the case for many, unfortunately, if we see that big increase in inventory and the demand isn't there to meet the supply, we can see that further drive house prices down. So with the difficult economic times that we are heading into, I think it's reasonable to assume that we aren't going to see as many people looking to purchase in this market, which could leave a lot of homes that are just sitting on the market waiting for a buyer who's not even shopping.
And while I agree with Peter that this is definitely a supply and demand issue, reason number one for the house market not crashing is that as the Bank of Canada eases up on interest rate hikes, demand will also increase, as will consumer confidence. And we've already seen it. The most recent Bank of Canada announcement saw the Bank of Canada increasing interest rates lower than the expected 75 basis points. Once all those buyers waiting on the sidelines for interest rate hikes to ease up see some stability in the market, we're going to see those buyers enter back into the market looking to purchase, and that is going to drive demand up.
Reason number two why prices are going to continue to slide is because we are heading into what feels like an impending recession. And with discretionary spending having to be sacrificed, I think a lot of people who might have been looking for a move but don't necessarily need to are going to hold off until times are a little more stable. Not only that, but in order for these increased interest rates to really take effect in the marketplace, they need to be sustained at a high level for a prolonged period of time. Remember, the Bank of Canada's goal here is taming inflation, and they're looking at the housing market as an unfortunate consequence of that target. And so for them, they're not going to take their foot off the gas until they feel they've done what's necessary to bring inflation back into a manageable state. And so because of that, if interest rates are staying high for a prolonged period of time, I think a lot of people are going to be a lot more conservative with their spending. And if that means staying in a less than ideal living situation for an extra year, I think that's a realistic possibility. So my prediction is that a lot of people are going to hold off and wait until we come out of this recession.
Now, let's take a look at the second reason why the housing market won't crash. And it's very simple. Immigration. The government of Canada has set some lofty immigration goals for the next couple years. In fact, their goal for 2023 is 465,000 new residents. Now, I know you're thinking, well, not all these new residents are going to buy as soon as they get here. But the reality of the situation is that on average, new immigrants purchase within their first 3 to 5 years of being in Canada. Now, even if they don't purchase within the first few years of being here, there's going to be a lot of additional pressure on the rental market, consequentially putting a lot of pressure on the housing market, equaling more demand. And the fact of the matter remains, we're just not building houses fast enough in Canada to meet up with the demand.
Reason number 3 why house prices have to keep going down is because housing affordability in the GTA is way out of whack. Taking a look at RBC's most recent housing affordability stats, the average home in the GTA is consuming 83% of the average household income. And that number is setting a new high for the Greater Toronto Area. So that means that if you want to buy a house in the GTA, you only have 13% of your income to work with for all of your other expenses. These are critical things to spend money on for residents in Canada, but specifically here in the Greater Toronto Area. And if they can't afford to do that, something has to give as a consequence. And I think realistically what's going to happen is we're going to see a reversion back to the mean. And while typically housing affordability in the GTA tends to be lower than other parts of Canada, it still has to come way down from where it currently is in order for it to be sustainable. One further note to housing affordability is it doesn't just have to do with house prices. Because interest rates have gone up, the amount that's being paid toward the interest portion of your mortgage has gone up substantially. And so even though you might be looking at house prices coming down as a metric of affordability coming down, that's actually not the case. So in order for us to see housing affordability truly come down in this high interest rate environment, we have to see prices continue to decrease beyond just the amount they've decreased to this point. Because up to this point, the decreases have been on par with the rate increases, meaning affordability has stayed more or less the same.
Reason number 3 why the market won't crash: astronomical rent prices. Now, it's no secret that affordability really is the issue. Historically, if you couldn't afford to purchase a home, you would rent. But now, with rent prices the way they are, it almost doesn't make sense to rent anymore. So I think that when interest rates start to normalize, you're going to have an entire pool of renters who are looking at the housing market as an affordable option, or at least on par with renting. And instead of paying somebody else's mortgage, they're going to start building some equity themselves, and they're going to put some demand back into the housing market.
Okay, so there you have it. 3 reasons why the housing market is definitely going to crash.
And 3 reasons why it definitely won't.
So let us know what you guys think and who you agree with. We'd love to hear your thoughts down below. A lot of times you guys provide us with some really interesting and insightful perspectives. So let us know what you think in the comments. Make sure to subscribe to our channel for more content. As always, thank you so much for watching.